Hi, welcome to the We Gonna Make It podcast show. In today's episode, we'll be discussing the recent crisis at Silicon Valley Bank, one of the most prominent lenders in the private market ecosystem in the US. Silicon Valley Bank financial group bonds and shares have plummeted after the company moved to shore up capital following losses on its securities and slowdown in funding. Moody's, which has downgraded the rating of Silicon Valley Bank, said that rising interest rate, increased macroeconomic uncertainty, venture capital investment activity, and high cash burn among SVB's clients have created challenging conditions for the firm. To understand what has happened with America's largest lender, it is important to look at the sound balance sheet and growth of SVB. Silicon Valley Bank, a subsidiary of SVB Financial Group, is one of the important lenders for early-stage businesses. As per report by Fortune, the 40-year-old bank has a relationship with more than 50% of all venture-backed companies in the US. Venture and private equity funds make up approximately about 56% of bank's global banking portfolio in 2022. In 2021, SVB saw a massive influx in deposits, which jumped from $61.76 billion at the end of 2019 to $189.2 billion at the end of 2021. As deposits grew, SVB could not grow its loan book fast enough to generate the yield it wanted to see on this capital. Therefore, the bank purchased a large amount, over $80 billion, in mortgage-backed securities or MBS, with these deposits for their hold-to-maturity portfolio. Almost 97% of these MBSs were 10 plus years in duration, with a weighted average yield of 1.56%. However, with the rise in Fed rates, the value of SVB's MBS plummeted. This is because the investors can now purchase long-duration risk-free bonds from the Fed at a 2.5x higher yield. Precisely with the rising US Fed interest rates, the value of existing bonds with the lower payouts fell in value as well. Prominent venture capitalists have advised portfolio businesses to withdraw their money from SVB even as the bank's top executive urged calm. Founders Fund, a high-profile venture capital, asked its portfolio companies to move their money as well. Even Square Ventures and Founder Collective also advised their portfolio companies to pull funds from the bank. SVB Financial Group CEO Greg Becker held a conference call advising clients of SVB to stay calm amid concern about the bank's financial position. According to Debargya Das, founding engineer at Glean, if VCs and tech companies pull out their money from SVB, then chances are that it may go bankrupt, many startups would be wiped out, and recession is likely to occur. This crisis has been compared to Lehman Brothers and Evergrande's liquidity crisis. As Kotak Mahindra Bank's CEO Uday Kotak wrote, when interest rates move up 500 bips from zero in a year, an accident was waiting to happen somewhere. Alright, to sum it all up, SVB is a bank that lends money to new businesses. They're really important for these companies because they can get them started by providing loans and other services. SVB has been going through some trouble recently. They've made some bad investments in financial products such as MBS. The value of these investments dropped because the interest rate set by the government went up, so the banks lost a lot of money. This caused a big problem for SVB because they didn't have enough money to pay back all the loans they had given out. They also had trouble getting more money because other companies that used to lend them money didn't want to anymore. In response, SVB had to sell some of their investments at a big loss and also ask for more money from investors. This made people who had put their money in SVB worried, and some of them even took their money out. This is a big deal because a lot of the new businesses depend on SVB for loans and other services, and if SVB goes bankrupt, then these companies will be in a lot of trouble. Thank you for tuning in to We Gonna Make It podcast show. If you have any questions or comments, please leave them below. Don't forget to subscribe to our channel for more exciting discussions on business, Web3, and other technologies. Thank you.